Good afternoon. Thanks for joining us today. We have a special guest, Brien Lundin, joining us. He's the editor of the Gold newsletter, and we're going to do a live Q&A with him today. So welcome, Brien. Nice to see you.
Great to be with you, Deborah.
So you're based out of New Orleans, right?
Yes, right outside of New Orleans, but New Orleans is where we have our annual conference.
Yeah. Do you want to tell us a little bit about that conference?
Yeah, sure. It is the oldest retail investment conference in the world. It started that whole cottage industry. A guy named Jim Blanchard, who was my mentor in the industry, and really an icon and foundational member of really the hard money, sound money movement, newsletter movement. He started it in 1974 to teach investors how to invest in gold, U.S. investors how to invest in gold, because he had spent the previous 3 years lobbying for the return of the right of gold ownership to U.S. citizens, and he was successful in that effort. So he decided to have a conference to teach people how to invest in gold. And he started Gold newsletter really the day that Nixon closed the gold window in 1971. And that was the primary tool he used to lobby for the return of gold ownership. So the conference and the newsletter have grown over the decades. Gold newsletter's in its 50th year now. I started working for Jim in 1985 as a junior copywriter and ended up running the show pretty much 5 years later. It's a lot of corporate M&A went on. And so I ended up with Jim kind of running it for him, and ended up buying it in the early 2000s after he passed away in 1999. And the conference it's known as the world's greatest investment event. It is known as the granddaddy of investment conferences. And it's featured really a who's who of the biggest names in modern world history and economics over the years. Everybody from Ayn Rand to Margaret Thatcher, Alan Greenspan, Frederick Hayek. The list goes on and on and on. And we're keeping it going, and it is known as one of the best and unique investment events out there every year, every fall in New Orleans. There have only been 2 times it has not been live. Right after the Katrina, we couldn't have a conference that year. And of course, last year we were virtual, as everybody else was. But this year, we are gunning for an in-person event, and I think we'll be the first major in-person event out there. So it's really exciting. We've lined up a number of incredible speakers that we have not yet announced. So I'm going to wait until we can have registration up before I announce all of them. But kind of a who's who of everybody in the, I guess what used to be called the sound money movement, but today is more like the skeptical money movement, skeptical investor movement. A lot of familiar names out there. Everybody's coming to New Orleans this year. Everybody's dying to be back in person. And the response that we've gotten already is overwhelming. So if everybody can get vaccinated and safe and sound, I think it's going to be an event that people are going to be talking about for years to come.
That's exciting. I think there are a few conferences that are planned for the fall in the States, but yeah, yours would be the biggest. So
yeah, hopefully
Canadians can be crossing borders and coming home at that point. But I'm sure you'll get a lot of U.S. attendees at least. So yeah, looking forward to that. Sorry, I interrupted you.
Oh no, we are. I think we're fine in the U.S. Canada, of course, is running a bit behind on the vaccinations. A big part of what we are is bringing all those junior mining companies from Canada down to our exhibit hall. So we're hoping they catch up on the vaccinations. But it looks like by midsummer or so, it should be all good to go. So fingers crossed.
Yeah, let's hope. But your show and your investment experience spans beyond just gold and precious metals, correct?
Yeah, we cover all of the markets. We're known for having geopolitical speakers at the conference. We're known for having, big picture economic subjects on the economy, covering the economy in general, and really all asset markets, all asset classes and all markets. But we also had that common thread, that kind of theme that's run through our event over the decades, because it was founded as a gold conference, that we have that legacy of promoting free markets, free minds, personal liberty, more of a libertarian / conservative philosophical bent. And we cover a lot of that over the years. We do have a number of the more famed libertarian commentators out there that have spoken over the years.
Interesting. Okay, well, it is a live Q&A, so for the audience participants, if you have any questions, feel free to input them in the Q&A box at the bottom, and I'll pose them to Brien. But I guess I'll start it off. I read your newsletter this morning and found it really interesting what you were talking about for gold, both technically and fundamentally. And I was hoping you could share some of your views on price of gold right now.
Yeah, we're in a bit of a holding pattern right now, in my view. We had obviously a very long correction that I think we put behind us now. We had that double bottom in March, and that correction just amazed everyone. Gold dropped through every support line that could be drawn, even the most solid and long-standing lines of support. Whatever technical marker the gold bugs or gold bulls could come up with to say gold may bounce off of this support, it plowed right through it. And it was a long-standing correction since the peak in last August. And my view on that is really with the kind of fundamental backdrop that we've had with unprecedented levels of monetary accommodation, really quantitative easing that's multiples of what was ever attempted before, both in speed and degree, and interest rates zeroed for as long as anyone can predict or anyone can think about, and a lot of fiscal accommodation. I mean, God knows that. I mean, it's trillions upon trillions upon trillions of dollars that are being attempted to be pumped into the U.S. economy now. So really an extraordinary level of accommodation like nothing we've ever seen before. So the fundamental backdrop was so bullish that gold really needed a correction of the kind of degree and duration that it put out there to wipe out that bullish enthusiasm. And it really succeeded to getting the generalists to sell out of gold fairly quickly and fairly early on. But it took an even longer time to get the gold bulls and the gold bugs really depressed. Now, I don't think that those gold bugs, as it were, really abandoned the sector and ever sold out, but they got really depressed. I mean, there were no rainbows and unicorns among the gold bugs over the last couple of months in regards to their views on gold. The most optimistic predictions I could get out of my gold bug friends was that gold might grind sideways for a while. And that's what you need to put in a bottom. And I think that's just what we got. I think perhaps the reason why we saw and have seen a bit of a rally in gold since that double bottom is precisely because sentiment had gotten so down in the dumps and we exhausted the selling. So we've had a natural rebound, a natural rally off those lows. Now we're kind of at the mercy of where yields go, perceptions about Fed policy, the first inflation numbers coming in, whether the bond market has discounted higher inflation numbers yet or not, and whether the markets that we're more involved in have discounted that or not. So I think we are in a bit of a holding pattern, looking for the next impetus to drive gold higher. But importantly, I think that the bottom's behind us and we don't have as much downside risk right now. So if you look at the long term and understand and have confidence in the fact, and I think it's a fact that gold prices will be much higher a year, 2 years, 3 years down the road, then you can ignore these short-term fluctuations. You can look at the junior mining sector, where there are a lot of companies that are still at extraordinarily undervalued levels, and just say generally it's a great time to get involved.
And you don't believe that we have to see a major market correction or crash in order for gold to work in this environment?
No, not in terms of, a lot, it's not a popular opinion really, but I think that markets right now, every asset class is being floated on an ocean of central bank liquidity. And in that kind of an environment, all correlations go to one. Historically, gold has been contracyclical to stocks and bonds, typically. But now everything's being driven by central bank and monetary policy. So every asset class is being floated higher. So I don't think it's a prerequisite for higher gold prices. There are some good friends of mine who do good work and who disagree with me and think it is a prerequisite for a long-standing gold bull market. I don't agree, but regardless, if we do have a stock market crash, the policy response by the central banks, the Fed foremost among them, will be swift, predictable, and far greater than whatever they did before, because the patient, the addict in this case, the financial markets, need ever more liquidity. They don't need easier money, they need ever easier money. So the next time that there's a significant hiccup in the stock market, the Fed will react very swiftly, and they will outdo everything that they've done before. They will take every program that they did before, every level of quantitative easing, they will increase that significantly. And then they'll dream up new things to do that we haven't thought of yet. So they'll open up the floodgates once again. And that policy response will lift gold, all assets really. But in the process, as we go through these cycles, every one of these cycles debases the underlying currency, creates debts that have to be debased actually. But the underlying currency loses credibility. And therefore you need gold to hedge against that and to buffer your wealth against that.
I think we've already started to see a lot of inflation. And I think that trend will continue as well. So here's a question for you. Do you have a price target for gold? Like, where do you think it could go?
Well, I learned long ago that in the prediction game, you can give a price or a time, but never both. So you can never be wrong. So I avoid those. But given where we are now, I would say, I'm less optimistic than I was late last year. But I think we can get back into 1850 to 1950 range this year. At some point during this cycle, we will get to 3,000 or above on the gold price. It's a matter of simple math when you consider a lot of different things, but primarily the size of the debt, where interest rates have to go, the necessity for negative real rates basically forever. Then this cycle, which will last probably 5 years or so, we'll get to at least 3,000 on the gold price. And there are valid arguments that we can get much higher than that.
Well, 5-year cycle would be nice. That's good news for me.
Yeah, we need people who want an explosive rise in the gold price. It's be careful what you ask for. What the perfect scenario is what we had in the 2000s. From about 2000 to really 2011, punctuated, of course, by the 2008 great financial crisis. But that period was unprecedented era for wealth creation for anyone involved in junior mining, and not just gold and silver, but all of the ancillary base metals and other metals and minerals, the rare earths, uranium, energy metals, battery metals. Tremendous profits, really life-altering gains were made because we had a lot of time to get for the market to mature, get into an early junior mining play, multiplies in price, has a takeout, you get in another one that multiplies in price, an occasional 10 bagger here, a 20 bagger there, a 4 or 5 bagger there. It was, extraordinary period. And that's what we really want in this case.
Yeah, I remember in the late winter, early spring of 2009, it was really the base metals that led out of the market crash, at least in
Mhm.
Canada. I remember buying copper stocks that month, the month of March, and did phenomenally well. When you look at copper now, I mean, it's at multi-year highs. Like, do you think it keeps going?
Yeah.
What's your prediction for copper?
Very, very bullish on copper. Have been. We called the copper bull market, and I believe we were the first, at least among our little sector, to call for the copper bull market in July of last year. And I think it's going much higher. For all the reasons I'm sure a number of your guests and have enunciated, but the energy revolution, the rebound, economic rebound, restart story, the fact that there have been many years of underinvestment in the sector, and it takes many years to bring new supply online. We're at a crucial point, really an inflection point in the copper market, where it's going to go for the next 5 or 10 years to levels uh, we would hesitate to predict at this point without losing credibility. So I like that play. Now the big miners have already enjoyed that and responded because they're converting current copper prices to earnings because they're in production. The junior copper plays or copper oriented plays have not yet moved. The ones that are either exploration or development, because there hasn't been a sustained, at least over the last 8 months or so, a sustained gold bull market in place. And I think that's what we need to get this junior equity sector um, of other base metals and all the associated markets. You need a gold bull market to bring all the speculative investors into the room, have them have some takeouts, some good experiences, create more capital to redeploy in the sector, kind of feeds on itself. But you really need that as a backdrop to have a rollicking bull market in the copper juniors, for example.
Well, I hope you're right about that one. I find base metals really interesting right now too. We've been
Yeah.
toying with the idea of doing a copper event because there's a lot of copper companies out there that we don't even know. So I thought it'd be a good exploratory kind of thing to go through the junior space and figure out what the best assets are. Um, Talking about gold and the macro theme, I mean, these days you can't really have a conversation about gold without talking about cryptocurrency and that trade potentially having taken away from the gold trade over the past few months. What's your view on cryptocurrency and has it been sucking the wind out of the gold trade?
It's been sucking some wind out of the gold trade, and I think trade is the operating word there. I don't think it's affected a bit of the gold as wealth insurance or gold as safety, as a risk hedge uh, demand, but it has affected a lot of the gold as a speculation demand. And there was, and I'm trying to remember who did it. I think it may have been the Nuremberg team at Capital Light. I think they did some quantitative work on it and estimated that it robbed gold of maybe 5% of its speculative demand, which seems low to me. I think maybe a bit more, but it certainly hasn't killed off speculative demand for gold. And that whatever it has taken away will be reignited if we just get a bit more of a sustained rally in gold. So it's as much the fault of gold not responding yet over the last 8 months to a lot of this fiscal spending and fiscal response that we've seen. It's as much the fault of gold as it is to the credit of Bitcoin, I think.
Do you think that people are holding both or choosing one or the over the other?
Well, it is like a religious war out there when you have people who are entrenched on one side. I've been involved in a number of Bitcoin versus gold debates, online debates, and at least the ones I've been on, everybody's polite, and you can get people like me, the gold bugs, say gold's been around for 4,000 years. It'll be around forever. That said, Bitcoin is great, and it should be held by people, for all the obvious reasons. And then the people on the Bitcoin side are similarly polite, but then at bottom they just say, "Nah, Bitcoin's a whole lot better," and they fess up even on air about that. So anything that they give gold is just platitudes. They don't really believe it. It seems like there are two warring camps. I think there's a large kind of silent majority in the middle there that do dabble in both and are willing to dabble in both. But the vocal ones are on just both firmly on both sides of the fence and and throwing rocks at each other.
Yeah, it's interesting. I mean, to me, cryptocurrencies make a lot of sense in terms of transfer of like wealth or the
Yeah.
ease of transaction and reporting. But some of the prices that these have hit are crazy. Or you look at what happened with Dogecoin, which was essentially a joke and now is real. And I think there was another one I read about this week. It's certainly kind of crazy and cult-like. But I didn't bring you on here to grill you about crypto, so we can move
Thank
on.
you. I appreciate that.
But I agree with you. I think that in the end, the gold trade will do well, regardless of what happens with crypto. And I don't want to get too political, but I do have a question that I'll just read it verbatim. Given your libertarian tradition, outlook on Biden, Trudeau, the Green Revolution spending means sovereignty debt crisis ramped up significantly. Sorry, that's a bit disjointed.
Yeah.
I guess it's just asking about what do you think about the Green Revolution spending and how that's going to impact debt?
Yeah, I think it's all part and parcel of we have um, parties in power now that spend or want to spend hand over fist while they can, while they have the power. I think in particular, I'm much more libertarian than I am either way, and I don't really have a dog in the fight, as it were. But I think the Democratic Party looks at the first 2 years after Obama was elected and saw that they had a supermajority and they really didn't do anything with it. And they don't want to waste this opportunity. So we had, we had a fiscal stimulus plan at the end of last year. The last thing really Trump did on his way out was a $900 billion stimulus spending plan. And they capped it at 900 billion because they were afraid of that terrible word trillion. They didn't want to cross that barrier. Well, Biden gets in and there it goes. We have a 1 point, and the mind blurs. You have a 1.8 or 1.9 if you get $1 trillion fiscal plan. You have a $2.3 trillion infrastructure plan, which was pretty much a joke because very little of it was fit any definition of infrastructure. And then before that was even could be debated, you have a $1.8 trillion American Families Plan that was filled with a lot of different giveaways that really tested well in focus groups, I believe. And, I tweeted out not long ago a chart from the Federal Reserve of the deficit and how it's expanding, really exploding. And the commentary I put on it was like tequila shots. The first trillion is the hardest. After that, it just goes down smooth. And that's what we see right now. When they finally passed that $1 trillion mark, passed the first multi-trillion dollar plan, it loses its effect. You become numb to it. So they're just tossing trillions after trillions after trillions. And I think the point of the questioner is, does this mean that we're going to have that kind of a debt default or whatever? Yes, I do. And I think things have really accelerated. A bad trend has gotten really almost exponentially worse now. And it's brought all of these potential resets, et cetera, forward in time. There's still no telling when it's going to happen and how precisely it's going to happen. But the one thing I do know is you want to own gold and silver going into it. But yes, the debt is out of control, and primarily because of the cost of servicing that debt. And some of the other work I've done recently in Gold Newsletter is to show how sensitive interest costs are to the rate of interest at the time. And that if we do have higher rates, the cost of servicing the debt just explodes higher almost immediately. It's curious because you would think there would be a bigger lag because there are so many different interest rates and maturities on Treasury debt, but it really responds almost immediately. And if we got up to, say, a Fed funds rate at this point around 2.5% to 3%, we'd start paying over $1 trillion annually in just to service the debt. Nothing else. It wouldn't go for defense, welfare, entitlements, anything. Just to service the debt, going to, deep-pocketed, rich, fat cat investors, to the Chinese government, all this kind of stuff that I think we'd have a political hue and cry for just defaulting on that debt. Why are we paying $1 trillion a year when we can put that toward free college tuition or just send checks out to everybody? The moment that kind of conversation starts seriously in the public discourse, the dollar is going to lose, it's going to get tanked, and precious metals are going to rise. So rise precipitously even. So the bottom line is that we are stuck in a conundrum where interest rates cannot rise. More importantly, they can't get positive on an inflation adjusted basis. So we could have interest rates go back to 3, 4, 5%. But in that scenario, we would have to have rates of inflation of 6, 7, 8%. Otherwise, the whole federal budget craters. So we will have negative real rates essentially for as long as the current monetary regime is in place.
It's interesting. I have good news and bad news. My cleaning ladies moved upstairs, but somebody showed up with a whippersnapper now. So I apologize for the background noise.
No problem.
Talking about the debt and just the macro scene, where do you think China is in the big picture of gold?
Well, China is very interesting. Around 2013, around 2013, China really started buying gold and encouraging gold purchases by its citizens. It set up something called the Shanghai Gold Exchange and allowed withdrawals from that gold exchange by the citizens. So all of the gold production in China goes into the Shanghai Gold Exchange, and then people buy from it. And it is the best proxy for Chinese domestic gold demand. And it soared to about 3,000 tons in 2013 and really kept those levels. Now, actually, I think it was about 2,400 tons, 2,500 tons. The bottom line is China and India combined absorb considerably more than all of the new production of gold every year. So we are starting off every year and continuing every year in a supply deficit, or that the new supply is completely absorbed by China and India alone. Now, you would think that would have a really strong effect on the gold price, but it doesn't, because the Chinese and Asians in general have a predilection, a long established pattern of buying gold on price declines. When it's cheap, they're bargain buyers. So it tends to act as a buffer for gold on the way down, and from a physical demand standpoint, and they tend to cut back on their buying as the price rises. So when they're buying, behooves Western investors to follow their lead and buy when they're buying. Western investors tend to buy on the way up. They're jumping on the trend, they're trend following. So right now, the Chinese are buying pretty significantly, and it looks like a good time to emulate what they're doing.
That's interesting. I guess the other question I have on a macro level before we get into maybe some of your picks and stocks that you like, is so talking about silver and the gold silver ratio. We've heard less about this recently, more about the silver squeeze or the manipulation potentially in the market for silver. But like last year around this time, we were hearing a lot about the gold silver ratio and silver outperforming gold. Do you still think that is potentially going to happen? And how do you see silver playing out?
Yeah, in a bull market that's based on monetary concerns, that where people are worried about the purchasing power of the currency being degraded, which is what we're in now, precisely that kind of long-standing monetary-based bull market, then silver has always outperformed gold. And so I expect that to happen again. So I tell people very simply, if you like gold, and you should, then you have to love silver. And I strongly urge anyone to divide their precious metals purchases, whether it's bullion for wealth protection and wealth insurance, or whether it's in the speculating in the junior equities. Make sure you have a very important or significant allocation to silver. Silver leverages gold. It moves further in the same direction as gold. And important to note, both on the upside and the downside, it leverages gold. So it is an option, if you will, on gold. Silver stocks are then leverage silver. So you've got options on top of leverage on top of the same investment theme. And so the silver juniors do even better than the silver producers as far as leverage, if you can get in early, et cetera. We saw a big boom in the silver juniors last year going into the summer. I think we're going to see that again. And a lot of those companies have come back significantly, and I think they're just tremendous bargains right now.
Silver seemed to hold in better this year than gold did during the decline. I have a couple more questions about silver. So there are rumors on the street that people are going to be buying physical silver starting tomorrow to try and push the price to the Reddit crowd, or like the Reddit crowd did. Do you have any knowledge of this?
Yep. Yep, and I fully encourage it. I would be joining it, except I have a liquidity issue right now, not enough cash to do it. But I did buy a big slug of PSLV, coincidentally, but I'll claim it was brilliance at the absolute bottom of the market about a month or so ago. So I for once, I timed that one very well. Good luck to them. The silver market is so rigged with the paper silver market and how so much new silver can be created by a keystroke, just hypothecated, that it's really hard to put a strain on the COMEX. That said, I think it is somewhat of a strain on the COMEX in that paper silver market. Part of the reason for doing it tomorrow is the anniversary of a great silver smash in 2013. Part of the reason is because it's, over the weekend, and therefore that harder for those powers that be to short the metal and dump metal on the exchange when the exchange is not open. And it's a good strategy, and I fully encourage it. I have some skepticism about whether it will be able to push the silver price immediately because of the fact that so much fake silver can be created on the COMEX so quickly. But I don't see any harm in doing it, because at the worst, everyone's going to load up on silver, which I think is going to be over $50 later this year or next year. So they're going to do very well by themselves by doing it. And I encourage that. The key thing to me is not so much the retail market, because that market, the unavailability of product, the scarcity of product in the retail market is as much a function of the fact that government mints aren't good business people as anything else. They just can't keep up with the demand manufacturing the various bullion products at certain times. And we've seen this phenomenon happen a number of times over the last 10, 15 years, where all of a sudden Western investors go out and buy silver for some reason, and they wipe out virtually all of the available supplies in the market, because mints don't carry a lot of inventory. They basically mint to meet demand, and surges in demand wipe out product. So that's more of a function of that. What's important to me is what's happening in the large bar market, more of the industrial level of investments, the institutional level. So I encourage people to buy, for example, PSLV, the Sprott Physical Silver Trust, because that's creating some strains on that large bar market right now. And when the Sprott Physical Trust, for example, unlike SLV, the iShares Silver Trust. Sprott Physical Trust is allocated metal. You buy it, it's allocated to you, and they actually have to take the metal and put it in the vault, et cetera. And their custodians don't go out and short the market to cancel the effect of the buying right away, like you can possibly see with SLV. So if the Sprott Physical Trust starts to have problems getting silver, what are they forced to do at that point? Either they have to stop buying, stop accepting new orders, or they have to start bidding up. And when you see that happening, where they have to bid up to pull bars out of the marketplace, then that in turn will put pressure on the paper market, because people will have to hedge their sales, et cetera, on the COMEX. So that's where I think we can actually put pressure on it, if we can get the big bar demand to really create a kink in the supply chain.
That's interesting. I haven't heard it explained quite in that way before. So really, really interesting commentary. So I had one more question about silver. Some of this has been covered. So silver has now been in consolidating phase for months. The vaults in London have basically been emptied. And now that green energy is on the radar, when do you think that silver will start to take off? Is it in the next couple months? And maybe in your answer, you can also elaborate on how silver plays into the green energy theme.
Yeah, silver plays into the green energy thing primarily through solar demand. Silver is commonly known as the precious metal that has both monetary and industrial demand. And I don't buy it. Frankly, I don't buy any of that. I think the industrial demand for silver is kind of a straw man argument or a red herring, because if silver was valued on its industrial demand, then it would be trading for under $5 an ounce. Over 70% of new silver production each year is as a byproduct of other metal mining. And so the price of silver has very little effect on how much more is produced or how much less is produced. So it really, industrial demand, I think, is largely just a stick with which the market and analysts can beat silver with. Because if you see a slowdown in the economy, they're going to use that as an excuse to sell silver more aggressively. That's not to say I'm a bear on silver. I'm a wild bull on silver because of the monetary demand. That is what really drives higher silver prices over the long term, and that will swamp any other factor in silver, including green energy, et cetera, et cetera. And that's on the margins. The price is set on the margins. But silver, if it was just an industrial metal, would be under $5 an ounce. That it's trading for around $25 an ounce or $20 higher is solely due to its history as a monetary metal. As far as specific price guesses and when it's going to get moving, I don't know, but I think it's largely dependent on gold. It won't move higher absent gold also moving higher, because that's its historic role as a lever on gold. So you'll have to have the same kinds of catalysts that we're looking for gold will also move silver.
So sticking to your bullish thesis, but no timelines. Love it.
No timelines. Too smart for that, Deborah.
Okay, well, I think that we've tortured you enough with the macro stuff. Let's talk about some of the junior gold and silver, other companies that you write about in your newsletter.
Yeah.
Let's start with silver, because that's where the conversation was. You do follow a number of silver companies. Do you want to pick one and talk to us about it?
Ooh, yeah. Let me see, what have I been writing about? I'll have to bring up the actual.
In your newsletter this morning, you had Vizsla, Silver, Silver Viper, and I'm not sure. I'll have to pull it open to recall.
Yeah. Well, both of those are really, both of those are wonderful silver exploration stories. Silver Viper is following up on some known trends and getting some great results. That's been a wonderful performer lately, even as we had, not as the market itself not being quite where it should have been, or underperforming. Now we've got Vizsla is another great case. They're expanding. The number of targets that the Panuco project has is just mind-boggling. And so they've got these 4 trends or parallel vein sets lined up that they're attacking in order. The Napoleon vein was the first, and they outlined about 300 meters of strike, really extraordinary grades. Then they've got, what is the latest number? 6 or 7 rigs, maybe more, maybe 8 rigs going right now. One of the most aggressive exploration programs of any junior anywhere, but definitely in Mexico. So they're expanding along the Napoleon vein strike and kind of wildcatting, but on strike and hitting the same grade. So giving the market a taste of how much more they can find. By the same token, the Tajitos vein, they've gotten some great results on that, and they've got 2 more after that. Beyond that, they've got about 9,000 hectares of ground that with dozens and dozens of other signs of other vein sets that they're basically scratching the surface, is the bottom line. They have the ability to bring a lot of these discoveries, whatever they discover, whatever resource they outline, they can bring it to market fairly quickly because they've got a mill and a processing facility that comes part and parcel with the project. So they can get into production very quickly. I really like Vizsla. I really like Silver Viper. I don't personally own any of those. I like BlackRock. They're drilling aggressively in Nevada. I do own that one. And I feel like, I'm leaving out one of my children by not mentioning other ones out there. We do cover a bunch of silver companies in Gold Newsletter, and I'm always meeting with new ones as well.
Yeah, we've done a bit of work with BlackRock and Suma Silver, who's also.
I'm talking with Suma Silver next week. I've heard some good things about them. Silver Sands is another one that's aggressively exploring that we cover and recommend right now. Like I say, I am a big silver bull. I think the silver story is so compelling, and you can leverage that through these silver juniors.
We had an Idaho event a few weeks ago, and we had a company present called Bunker Hill that's exploring a past producing silver mine in Idaho. And that story actually was really interesting. I hadn't heard it before, and I think what they're doing is pretty cool as well. A lot of the silver companies are based in Mexico. In regards to junior exploration companies, what jurisdictions in the world do you feel have the best odds for new discoveries? What jurisdictions do you like, dislike?
Well, it's a balancing act. It really is. The quality or prospectivity of a project has to be balanced against the political risk of the regime. I am not, for instance, a big bull on, say, Bolivia, but we recommended New Pacific Metals when no one else was, and it was a multi-bagger for us right off the bat because I had a long history of management, absolutely enormous project, and it's done very well for our readers and for any investor that's invested in it. And it's going to go much higher as it develops that project because it is so extraordinary. It's one of the biggest silver discoveries in recent history. But you have to balance that against political risk. By the same token, I tell junior investors that you're investing in a junior exploration development company. You're not investing in a major mining company. Very few of these juniors will actually go all the way and develop the project and go into mining. And you really don't want that. You want a big takeout at some point. So when you look at these regimes, you only need the country to hold together for a couple of years, really, because that's the typical horizon for these kinds of investments, maybe 3 years at the outside. So you have to balance that against it. That said, if you look for the most prospective regimes for new discoveries, well, probably tops on the list would be the Democratic Republic of the Congo. But that's not one of the nicer regimes to explore and develop a mine in. Very few people can go in there. The Chinese, Robert Friedland, the Lundin Group probably among them, but that can go in these areas and develop these projects. So you have to balance it against the political risk. My view is that generally you need a bigger, better project if you're out of Mexico and North America. And it's, there are a lot of great opportunities in Canada and the U.S. and Nevada and Idaho, and you can make a lot of hay in those areas. If you go much further, and we do, I am chairman and I'm one of the top investors in a exploration company in Fiji. Love the prospects, and you have to balance that political risk against those prospects.
Makes sense. I've been hearing more about companies exploring in Central Asia, which I think there's some huge gold trends and things there, which is kind of interesting as well.
One of our top recommendations is Erdene Resource Development, because they are on a fast track to develop a mine. And it's also, there's an exploration play, one of the better exploration plays out there, kind of buried within that development play. I do own that stock personally, but I like that, and it's in Mongolia.
In Mongolia for a while was a really hot mining spot.
Yeah.
I remember, what is it? Togoi?
Yeah.
Point South Gobi Resources, which was, I think, a coal story. And there used to be, I think it was about 10 years ago, there was a lot of interest in Mongolia.
There was coal, there were uranium plays during the uranium mania. It's kind of, on a junior standpoint, in gold, dominated right now by Erdene and Step Gold. And both those companies are going to be regressing. I think Erdene, because they have yet to get into production, they have a big re-rating ahead of them, which is why I bought stock in the open market myself.
Interesting. I'll have to take a look at that. The last time I looked at Step, I think they were near-term production, but I haven't had an update there for a while. But you work with them, I think, as well.
Yeah, I don't currently recommend Step Gold, but they are in production now.
Interesting. So you mentioned a company in Fiji that you're the chairman of. Is that company public?
Yes, it's. Thank you. I should have pitched that.
You gotta take your opportunities to plug stuff,
Thank you. I appreciate that. It is Thunderstruck Resources. Its symbol is AWE, AWE, on the Toronto Venture Exchange. We have basically 4 projects on the island of Fiji. We have 2 high-grade zinc copper discoveries, VMS discoveries, that were made by Anglo about 50 years ago. Then kind of forgotten, Anglo moved on, and really high-grade discoveries, significant intervals of 15 to 20% zinc and 2 to 3% copper. But they were VMS at the time. Anglo moved on because they were looking for porphyries, and they kind of lay fallow out for decades. So we brought those back to life. We have a joint venture of Jogmec on one of the discoveries. The other one is still available for joint venturing. We have a gold prospect called Liwa that we're very excited about. It's a soil anomaly that extends for over 3 kilometers on trend, with some really high-grade sampling and coincident geophysical anomalies. And we just started drilling, got halfway through the first hole last year when Fiji got hit by a cyclone. And then got hit by another cyclone right after that. So the combination of that and COVID delayed us until probably June or July before we can get back in there and continue drilling. But it is one of the more exciting prospects. Of course, I am very biased. I own an awful lot of stock. I'm a co-founder and the chairman, but one of the more exciting prospects I've seen in my career, because it does extend for 3 kilometers along trend with again, coincident soil and geophysical anomalies. So we will be drilling that this summer, or plan to.
That sounds interesting. I'll be honest, I'd heard the name before, but I didn't know anything about the company other than it has a female CEO. That was it. That was the extent of my knowledge.
And she is a go-getter. Bryce Bradley is one of the more dynamic type AAA individuals out there. She basically moved her and her daughter to Fiji about, God, I guess it's going on a year now. And the local government fish mining officials absolutely love her. She has gotten into the local culture, and from the government officials through the local populations and tribes. She's got a lot of friends, close friends now in all the right places, and understands that culture. So we can get work done in Fiji that I would venture to say very few other companies can get done, because we understand now how to do it.
Well, if you need help organizing a site visit or anything, we'd be open to going to
Let me tell you, as
Fiji.
soon as we get those drill results in from LEWA, that's kind of an ongoing joke. We are going to really be able to selectively pick the analysts that we get on a site visit rather than beg people to come. But we are up in the interior of the country. We're not, there digging holes on any beaches or anything like that. That said, it is a wonderful place if you get to the coastline. But on the interior of the country, it is, much more remote, and it's a very mining friendly nation. Long history of mining and really big projects as well.
Interesting. So shifting gears a little bit, I noticed in your newsletter this morning you wrote up Maple Gold, which is
Yeah.
a name that we've done some work with. Do you want to tell us a little bit about Maple and why you like it?
Yeah, they combined forces. I say combined forces, combined their project with the Jutel project of Agnico Eagle, and got an awful lot of money in the process. They are extremely well cashed up. They are exploring the Douay project, which has a multi-million ounce resource on it that just needs to be kind of put together. And they were constrained, as really the whole sector was for a few years, by what they could spend. Now they've got the partnership of Agnico going. They've got plenty of money to do a comprehensive program, tie all the disparate resources, expand those resources, expand them to depth, test the targets that they just didn't have the funding to really adequately go out and test. And that's the story that everybody knows about and appreciates, and why there's been a bit more of attention to the company in the last few months. Kind of a hidden story there that I'm trying to figure out is they got the Jutel project from Agnico, and they've got hundreds of historic drill holes that they've been digitizing and trying to reinterpret. And if you see management's commentaries, they never fail to mention that they're very excited about what they're finding there in that reinterpretation. And I think that's a kicker to the story, and may even be one of the two primary rationales or reasons to buy the story that we're going to see develop over the next couple of months. I think they're very excited. Actually, I know they're very excited about what they're seeing as they tear that apart and digitize all that historic work.
That's interesting. You also wrote about the Scotty Resources merger that happened
Mm-hmm.
recently. Do you want to give us an update there? I hosted an event with them at ERIC, I guess a year and a bit ago, and I followed the story. We've done work with a couple other Golden Triangle players, but yeah, I'd love an update.
I love the Golden Triangle. It's hard to find a more messed up piece of the world's geology than that area. You find every type of mineral deposit, virtually every type, but it was certainly every type of gold and silver deposit in that one area. Now it's a big area, but it's amazing for its prospectivity and the number of projects. Historically, a lot of it has been very fractured, with a lot of smaller claims, smaller owners and groups. So independently, Scotty and AUX Resources, and they shared some management geological expertise along the way. They started consolidating a couple of different camps: AUX, the historic Georgia mine, and a couple of other projects, and Scotty, the Scotty mine, and a couple of other projects in the area, both of which were famed for having really high grade, pretty discrete resources, structurally controlled, but really high grade resources. And if you look at it, a lot of the resources are historic, but just broadly speaking, you might have what you can see is a couple 100,000 ounces of historic high grade here that if you expand it with some modern work, you might get that up to 400,000 ounces. And another project, there's another 150, 200,000 ounces. Well, you might be able to get that up to 400,000 ounces. And then this great target over there that nobody's ever really worked at but sampled, you'd like to drill that. So these two companies were kind of working around each other, actually having some directors in common, having some geologists working for both. It really seemed that eventually they were going to merge to get those synergies together, but they both had to get through the past season's drill programs, get the results out there, see what the market thought of them, so that you could have really fair evaluations of nothing kind of being hidden. They got through that process, and then we saw the merger that we kind of expected would happen. The key to this is not just that, well, we can house one drill crew and then send them to all these little places, or we can have certain, logistical advantages. The key to this is that all of a sudden you've got, as I said, disparate little targets that might be able to come up with a couple 100,000 ounces of high grade, another couple there, et cetera, that you can now combine. And with another season or so of work, you can get toward compliant resources that get you toward that, say, 1,000,000 ounce key threshold that much more quickly. And then, like Ascot is doing in the area, you can work toward a hub and spoke kind of exploitation plan where you have a central mill and you just bring the resources in from the various little deposits. So it is not just logistic synergies. I think it's a company maker, something that was very natural. And I think there's probably a bit more consolidation that can go on in that area.
There seems to be a number of players popping up. There's a company that we've done some work with called Kingfisher Resources that went public about a month ago. They're in and around that area, like early exploration, but a really exciting land package. They did some baseline studies last summer, and I think they'll be drilling in July. So that's one that we've been watching. And then I see that you also follow Skeena.
Yeah. Yeah, I'm really frustrated with Skeena in that when I really wanted to buy it when we were recommending it around 30 cents and procrastinated, and it just got away from me. But it's been a huge winner for our readers in Gold Newsletter, if not me personally, but for our readers, which is, of course, the most important thing. But it is just an extraordinary play. They recognize that the metallurgy issues, such as they were, could be solved very easily today. They recognize that a lot of the logistical problems that led to higher cost production when the mines were in operation are now behind us with the development of the region. And basically, grade is king and gold prices are so much higher. So they are developing a multi-million ounce resource and plan to exploit it at really just phenomenal grades. So I think they've got a lot more to go. It's still early in the process for them.
Yeah, good management too. We know.
Yeah, wonderful management team.
Yeah. Another one that we are starting to do some work with is Enduro, which was Crystal Lake before. I'm not sure if you're familiar with them. Anyway, I don't see any more audience questions, and we're right on the hour mark. Is there anything that you wanted to discuss today, Brien, that we didn't get around to?
Well, not really. I would encourage anybody to go to goldnewsletter.com and subscribe to the letter. Gold Newsletter is one of the more affordable newsletters out there. I have 3 new recommendations this month that I'm very excited about. The newsletter just came out yesterday, so I want my readers to have the chance to participate in it. But I'm very excited about all 3 of those new recommendations, and I urge anybody to go check out the newsletter.
Well, thanks.
And come to our conference this fall, neworleansconference.com.
I was going to ask you about that. For individuals that want to potentially come as investors, what's the criteria and how do they register themselves?
Well, it is absolutely impossible to register right now because we are instituting a business model where you can choose to attend virtually or in person. So we've got to finish finalizing the IT work and web work to get the registration up for those options, which is largely due to me being on deadline and not having a chance to finish all the descriptions and et cetera. So if they just call us or email us and get their name on the list, we will send them a link as soon as registration opens. But it will, again, offer the opportunity for an in-person experience down here in New Orleans with dozens of the top experts out there. And you'll recognize all of the names, and you'll be able to talk with them in the halls face to face. You'll be in an audience of hundreds of very smart, insightful, accomplished, successful investors willing to share their ideas, and an exhibit hall packed with new opportunities and many of the best junior mining and other publicly traded company opportunities out there.
Mm-hmm. And in a great town.
And in a great town. A lot of fun. We just dropped mask requirements in Louisiana, and it's almost like everything's normal right now. It's amazing.
That's great. Well, I've been in Costa Rica for the past 7 months, so it's pretty normal down here. But Canada, I think, is still having some challenges. But like you said, hopefully they can get needles in arms, and by this summer things go back to somewhat of a normal life.
Well, I am envious of you being in Costa Rica. I don't want to keep you too long from the beach, though. Is that on the interior or on the coast?
Right now, I'm in a place called Tambor Beach, which is it's the south of the Nicoya Peninsula, not far from Santa Teresa, if people know that area. But I have been kind of all over the country, just spending a month or two in different spots, trying to figure out if I would actually like to live here. I came down in October just for 10 weeks. I was planning to come back or go back to Canada for Christmas, and just the way things progressed with the lockdowns, I figured it was better to stay put down here.
Yeah, as long as you have internet access, why not?
Yeah, that's why I have like stuff going on in the background. The housekeeper comes and like helps us out of bed. Yeah.
The Aiden, Marianne and Pamela Aiden, great longtime friends of mine who write newsletters for decades, very highly regarded technical analysts, live there. Mm-hmm. And I don't know if you know them, but I'd be glad to introduce you via email.
Yeah, I'll have to check my emails again. I think Tom Calandra did email intro a while ago, and I've connected with Omar. Who I think
Omar is great. Omar is, he has a great handle on the real estate scene in Costa Rica as well.
Yeah, I actually talked to him about potentially buying something, or we were looking at something, but we didn't end up going through with it. But yeah, he's been a great connection.
Good.
But yeah, thanks so much for doing this. And it's been nice to get to know you. I didn't really know you other than on Twitter and from your conference. So I'll definitely be there this year and hopefully bring a couple of the Adelaide companies down.
Please do, and keep them coming. I'm talking to companies every day, many times a day, looking for new opportunities. So please let me see all of your clients and look forward to seeing you down here.
Yeah, for sure. Thanks, Brien.